First quarter growth is very impressive. 7.8%. It exceeds the RBI expectation of 6.5%. Well, this first quarter growth is very impressive. At 7.8%, it exceeds the RBI expectation of 6.5%. 6.5% growth rate was also the average growth rate of the last 4 quarters. What is even more encouraging is that some of the high weight sectors as far as output is concerned, namely manufacturing and the 3 important service sectors, which together constitute a weight of 72% in overall gross value added. All of those have picked up and they are showing growth rates, respective growth rates, in the range of 8 to 9% on average. In fact, the service sectors that have even a higher weight have also picked up. Now, most of this growth has been supported by a demand side push from the government. Government's investment expenditure particularly, which grew by close to 30%, and consumption expenditure or revenue expenditure also grew by nearly 20%. Now these are the demand sectors that actually government initiative was able to stimulate the economy. And in addition, actually the private final consumption expenditure, which also grew at 7%, which is quite robust, although it is only marginally less than what happened on average last year. So I would say that this growth is very encouraging. I only see 1 or 2 points of concern. First, as far as the contribution of net exports is concerned in the overall GDP, it has contracted, whereas in the last year it was positive. And I also see that it will probably further accentuate given the current challenges to our exports. So there are 1 or 2 points of concern, but otherwise it's a very robust growth.
So can we expect similarly strong GDP growth in the next quarter as well?
Well, in the next quarter, I think because of the heavy monsoon and some delays in government projects taking off, also because of the monsoon, there would be some slowing down of government capital expansion. But I think private consumption expenditure would continue, and there would be some challenges on the export front. So my expectation is that we may not be able to maintain something like in excess of 7.5%, but I think we should be somewhere in the range of 6.5 to 7% in the next quarter. But there should be further improvement as we go along into the 3rd and 4th quarters, when we will first have a demand push because of the festival season. Festivities would actually stimulate private sector demand, and later on we will be able to recover from the export side shock with suitable countermeasures.
If you like this video, then like, share and subscribe to ET Now.